to tell us the signals where I can get my buy and sell signals. The more you get into the pairs you want to analyze, the easier and the more precise you can see your entries. So the hard work is done usually in the beginning of the session, looking, identifying the strengths and the weakness, and identifying the major currency that should be the candidate for the week, the one that should give you the trades, and then after that it kind of falls into place. So the next one we're going to look at now is the dollar Swiss. And this pair really hurts, guys. I mean, if you are from the United States like I am, this is really a painful sight. One of the interesting things that I just want to share with you, because I kind of believe that that weakness in the dollar is much more, it's orchestrated, if you will. It's something that the United States really wants. uh, and one of the I was reading the news the over the weekend, and one of the State Department representative was actually complaining was actually complaining that the euro was weakening. I mean, remember, the euro was bounced back on Friday, going up towards the 143, but when it was coming down to the 140 and the 139, what somebody from the State Department in the States was complaining that the euro was weakening, and that weakness is going to affect the U.S. Exports and the U.S. economy. So it seems to me that this is something that the U.S. government is something they want. And I was doing some homework. I'm serious, Kevin. I'm going to show you something. I was doing my work over the weekend because one of the things that I love to do is just go and look at all the charts and try to understand why things are happening when they are happening. And take a look at this. I'm just gonna veer for a second, but I think it might interest you guys. Take a look at this. This is the S&P, which is the U.S. stock market. And look at this. It's pretty much from July. We're at what, 1331. We're now close to 13. It looks from July. It looks like it's in a major bull market to the upside, right? And you see that, guys? Because I just want somebody to say yes before I put you to the other chart. But anyway, before I put you, and if you go to, this is the low. This is the structure point that it began the breakdown to the downside of the big break to the bear market, if you will, from the 2007. Look at this right there. And this is the final break right over here, which is the 1300, and that was the capitulation. Now we are back to the 2008 2011 pre the break level. We're sitting right there at the 1300, which we're right back. So the US stock market has made back all its losses from the end of 2007. So any US investor that has a, and this is what we're doing, one of the reasons we're doing the proactive investor, guys. Any US investor or UK investor, if you will, or whatever, anybody that has a retirement, for the last 2 years he lost everything, and now he's back to even. So for 2 years he made nothing, but actually having all this pain, and now it's back. But why are they doing this? Why are they doing this? Why is this happening? It's happening because all the United States companies are now, the dollar is cheap, so they are exporting, they are beating or exceeding their expectations, their earning expectations. Everybody wants to buy the US goods and services because it is quite cheap, because the dollar is cheap, and therefore the US stock market now is going up. But why is this significant? I mean, again, that's my thinking, and I could be wrong. But the US economy is made out of two parts. It's a consumer-based economy. 70% of the GDP is consumed by the US consumer, and the wealth of the Americans as a whole is made out of two components. One is his house, real estate, the American dream, or owning your home, and two, what you have in your retirement. If you're able to buy and sell your house, get rid of your real estate and get the equity out of your house in the United States, and you have your nest egg good and well like in your stock market, then the American economy is in good shape. The American consumer is in good shape. They're going to start to spend, to buy, and they're going to buy the new car, they're going to buy the new dishwasher, they're going to buy whatever they need to buy, and they're going to stimulate the economy and take it up. So the United States cannot do anything, government cannot do anything with revitalizing the housing sector, but they can do what you see in front of you by lowering the dollar, stimulating the companies, pushing up the stock equity, making the investor, the US investor, let's say 60% whole, by now building back his portfolio. So at least instead of having 100% pessimism, they took away the pessimism, and now the consumer confidence is going to be back positive, because now their portfolio is back to where it was before the bear market. Then the next push should be slightly much more easier by creating now some excitement in the housing, and I think that is the reason why they're keeping at least the US dollar down, because they will be able to keep the stock market up, and they're going to be able to raise the consumer confidence in the United States, and then that hopefully will rub off on the housing market, and if the housing market picks up, well, we're out of recession in the States. Anyway, that's my 5 cents. So going back to the Swiss, as you can see, this is the lowest it has ever been. It's in a slide. There is no reason for us to even think of buying the dollar Swiss. We should be looking for a continuation to the downside, but we are going to have an entry just in case we are going to. So the entry we will have is somewhere around the 85.56, which is about 50 pips away from where we are at. And if it takes out the low of Friday, which is the 84.52, which is about 60 pips away from now, we're going to take it to the short side. Okay, so let's look at the intraday. So our buying point is going to be the 85.55, let's say around there. And you can see that you got the two sessions over here overlapping on each other, so our buying point is going to be the 85.57. Alright, and our short point is going to be the 84.52, which is the low of Friday. And my structure long is still the 88.98, this is now going to be my new structure long. My structure short is the lowest low that it has ever been in history, 84.52. If I go short below 85, below the structure point, I want it to be my stop. And if I buy it above 85.57, I'm going to place my stop below 85.20. Okay, that is the dollar Swiss. So we're buying it above 85.57. Our structure long is 88.98, and if I do, my stop is going to be the 85.20. I'm risking about 35 pips on that trade. My short is the 84.52. It is also my structural short, and it is my short stop. Okay, that is the dollar Swiss. Anybody has any question on the